Hello, everyone. Thanks for joining us this Wednesday morning and afternoon in some places, and welcome to this educational presentation where today I want to talk to you about, even though you couldn't be in a down market, there are still tons of trading opportunities all around you. For example, this past week we saw that the market shifted gear and is starting to actually go into an entirely different environment. This is where traders usually have a difficult time because it's really easy to be successful in the markets if things are going your way. In other words, if the market's going straight up, most strategies and techniques work great as long as the market is participating in part of the environment in which the strategy was based upon. The only trouble is when things change, that's when traders have a very difficult time. For example, we see here just last week, Yahoo Finance reported that U.S. stocks fell again, capping the worst week since the financial crisis in 2008. This was just last Friday. The widening coronavirus epidemic sent U.S. stocks plunging for the seventh straight session on Friday, capping their worst week since the 2008 financial crisis. So you can see, it's obvious after 7 days that the market went into a nosedive, and this is where everyone has difficulty in trading. Why? Because the environment changed, the conditions changed, and all of a sudden, what worked tremendously doesn't work anymore. For example, we look at this chart here. This is the Dow Jones Industrial Average on our platform, the PTS Primo charting platform. And you see here in this 1 week alone how it dropped over 4,000 points in just 7 days. As we said earlier, everyone is a genius when the market is cooperating. But the minute the market wants to change its energy, wants to change the environment, this is when everything goes out the window. So here's what we're going to talk about today. As we look at this chart in UI, now remember that last week was the last week in February. Let's look at the beginning of February, okay? Prior to all of this happening, I'm going to share with you a technique today and a way in which you can actually trade if you decided to do so that actually would have generated 3 sell signals prior to the disastrous week we had last month in February in the markets, and how you could have generated some really nice setups that were all specifically designed to trade the market going lower. And you'll see how simple it is to actually apply this on our platform. Everything is one click away. We designed it to be extremely simple. So this is the trading educational portal that you've been searching for, the PTS Primo charting platform. So this promises to be a great educational presentation today. Thanks once again for joining us. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've teamed up with Pro Trader Strategies with one goal in mind, simply to educate traders. That's really what's missing with most traders these days. They think that they are doing well, but when the market changes its environment, changes its energy, all of a sudden nothing works anymore, right? Well, that's not the definition of a true trader. A true trader should be able to exist and be able to trade any market condition, and should be able to have a strategy that is at least consistent in all these different type of market conditions. If your strategy only works when the market is behaving one particular way, well, that, in my opinion, is not a really good strategy. So today I want to educate you, if we go into a sustained downward move, how you can actually trade along with the downside and how simple it is to actually do using one of our really powerful tools. Okay, I'll explain all of that to you in just a few moments. But before we begin, as always, we're first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, speaking of education, if you'd like to get more education on a daily basis, I invite each and every one of you to follow us on Twitter. There's our handle right there. Might be a good idea to copy that down because I post different educational information on a daily basis, anywhere from a little bits of financial wisdom to signals that our strategies have generated, and I explain a little bit in detail on why we are going a certain way based on the rules of the strategy. So lots of great free information and education. Please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. That's our only goal, simply to educate traders. If you've come here today, as I always state, looking to see if what I should buy, for tomorrow, what I should sell, or what I think is going to happen in the market, or what are the signals for the next week, you've come to the wrong place, because we don't believe in that. The entire industry is based on telling traders what to do and what market to trade and what they think the market's going to do. And if that works so well, then why do 80 to 85% of all traders fail? Well, it's because that doesn't work. I mean, when I first started trading 43 years ago, there were tons of outlets for us to get information from trading gurus and, and news wires and ways to find out what they thought was going to happen. And that didn't work either, because I tested all that and I couldn't make a dime. So what my mentors taught me is that they said, Steve, once you have the education, you have to make your own decisions. That's the only way you will become a consistent trader. All the consistent traders I know never watch TV to see what someone is thinking. They never watch the news channels. They never look at earnings. They never look and see what economic indicators are coming out. They don't care about that stuff because they already have in their mind what they're going to do based off their specific plan. They don't ask anyone to go to a chat room what they think the market's going to do. I can't tell you how many prospective students I had email me this last week saying, Steve, what do you think of the market? I said, well, I teach you so that you'll never even have to ask that question. So that's really the worst thing you can do, is ask someone what they think. Because basically you're saying, I don't have any thoughts about the market. I'm not experienced enough. I'm not knowledgeable enough. I really don't trust myself. So you tell me what to do. And imagine an airline pilot saying, what does anybody think about how I should land this plane? Or a brain surgeon saying, what does anybody think I should operate this way? Or what are your thoughts on the operation? You would never hear any one of those professionals say that. But why do you say that as a trader? There's no reason why you should ever ask or ever wonder what someone else is thinking or what someone else is buying or selling. You should be in charge of your own trading destiny. And that's our goal at Specialist Trading. You see, my goal is not to force feed you signals. It's not to tell you what to buy or sell. It's not to have you come to a chat room so you can see what I do. No, my goal is simply to teach you how to trade with the specialist edge. This is the same edge that was taught to me some 43 years ago. It's sustained me that amount of time, so hopefully it will be able to do the same for you. Now, today's going to be a great class. I have a lot of examples to share with you on this simple technique I want to share. But please, if we ask questions for every slide, we'll be here far too long. So if you have a question, please wait till the end of today's class to ask them. I promise I'll get to each and every one of them at the very end of today's class, okay? The only question I'll answer is the most popular, and that is this being recorded? Yes, it is. We will send each and every one of you a link to this recording. So if you have to leave early, or if you can't hear my voice or see the screen correctly, don't worry. Everyone will get a link to this recording, okay? All right. Let's start today's educational presentation. Let's begin. And what I want to talk to you about today is about being able to change and be in sync with the market. Because this is one of the first things that my mentors taught me. The secret to consistency is simply to want what the market wants. I mean, think of it. Whenever you're in a series of losses, it's basically because you're wanting the market to do something and it wants to do the opposite. Wouldn't it be a lot better if you simply want to do what it wants to do? So if it wants to go lower, then you want to be a seller. If it wants to go higher, you want to be a buyer. Unfortunately, we're all trained, myself included, when I first started trading some 4 decades ago, to do the opposite. How many of you said, well, gosh, the market was down too much last week, so I started to buy it on the 3rd or 4th day down, and I got killed, right? Or maybe the month before, when it was going straight up, you were shorting into it the entire way. You have to be able to learn what the market wants. I know most of you say, well, Steve, trend trading 101, I know that. But here's the difficulty. Most traders are a day late and $1 short. As we look at this chart here in Zion, this older chart, most traders will say, well, Steve, yeah, it's obvious that the market wants to go lower. So somewhere around this point, you say, well, I'm a seller, or I want to be out of the market entirely. I don't want to buy this. And then this happens, right? So as I stated, you need something that's able to really be an early trend detector, something that can really tell you what the market wants to do. So basically what you need is a translator. We're not trying to pick tops and bottoms when the market will bottom out. We're not trying to pick when the market will top out. We just want the market to translate to us, to tell us what it's doing. Now, most, filters or most indicators that, work that way are okay, but they're a little bit late. They're lagging tools. In order to trade in sync with the current trend, you need a tool that translates what the market wants to do almost on a tick-by-tick basis. This will help you, get to that level of consistency that I know you're searching for. So is there a tool that's able to do this? Yes, there is. The tool is the PET-D. You've heard about me speak about it, for years now. It's something I use on a daily basis on my own personal trading, and I actually wouldn't trade without it because it really helps me that much. It has literally dozens of uses. That's how versatile this tool is. For those of you who aren't familiar or are new to my presentations and you're saying, well, what is this PET-D? I've never heard of this before. It's a proprietary algorithm. I was first introduced to this on the floor of the Pacific Stock Exchange when I worked on the trading floor. And at that time, we called it the formula because it was a formula that we had to calculate, like I said, almost on a tick-by-tick basis. But don't worry, we've taken all the hard work out of that for you. With the help of programmers and high-speed computers, we've made it into a proprietary algorithm. So what we've done now is design it to be a color bar tool. So what it does is automatically colors the bars either green for a series of upward moves or red for downward moves. That's how simple it is. Now, one of the basic uses of this is as a signal confirmation tool. So I don't care what strategy you're using. It could be based on one of my methods. It could be based on something you've devised. It could be based on the full moon. It makes no difference. But whenever you get a signal, it should be confirmed by the PET-D. You will, in my opinion, add to your level of consistency by confirming the signal. So if you get a buy signal, let's say that's based on the full moon, you want to see that that signal bar is colored green because you're in sync. You're wanting what the market wants and vice versa. Now, probably one of the simplest but most powerful ways to apply the PET-D is as an early trend detector. As I stated earlier, the PET-D is the best tool I know of for defining the short-term trend because it really is listening to what the market wants to do. Now let's go back and look at that older chart of Zion, okay? Now how could the PET-D have helped us? Well, it's as simple as on our platform, just simply clicking on the PET-D tab here at the very top of the platform and the colors will automatically change. You see now that with a series of 3 to 5 red bars, we knew well in advance that we were in a downtrend. And we knew well in advance before we went all the way back up down here with 3 green bars that we were starting an uptrend. So as it says, the beauty of the PET-D is that it tells you which direction you should be trading. Once you know, you can apply any technique that is in sync with that direction. So basically, now you're wanting what the market wants. See how simple this is? It's very easy to get to that level of consistency once you are in sync with the market. All right, so I want to teach you this technique today that uses the PET-D. And as you'll see, we could have applied this last week when most people were throwing their hands up in the air saying, when's this going to stop? I keep losing money. You're going to see how you could have done very well using this trading technique. Remember, this works in all markets, all time frames, and all directions. Now today, we're just going to have propensity to look at the market from the downward point of view, okay? So we're going to be devoted for looking at a downward market. Now this tool can be used also in a straight up market, and I've given webinars about that. But now, since it looks like we may have changed course here and that the energy may have changed in the market, you're going to want something to help you when markets go lower. So we're only going to devote today's presentation to downward moving instruments, okay? All right, so let's look at the sell setup. A red bar closes above the previous red bar's high. So basically, you're looking at 2 bars. Could be 2 tick charts, could be 2 monthly bars, could be 2 currency bars. It makes no difference what market, what time frame. All right, so there's bar 1 and there's bar 2, as we see here. All right. Now, what you want to do is apply the PET-D and see that both of those bars are red. And once we apply them, we see they are. Now, you see how this is outlined? It's because we're using the traditional way of looking at the candlesticks. I know most people would say, well, Steve, how do we know that's an update? It's white. Well, this is the traditional way of using candlesticks. Basically, what most people think are candlesticks are really an altered version, an edited way of looking at them. When candlesticks were first introduced to the West some 40 years ago, what happened was most Westerners couldn't figure out what they meant. They'd never seen anything like this, and they couldn't understand how to use it. So what all these platforms devised was they said, well, listen, if it's a down day, we'll color it red, and if it's an up day, we'll color it green. Now, this goes entirely against the way they were used in the East. No one ever colored them red or green. They were always either open or closed. If they were closed, they were colored black. If they were open, they just used a white background, and they were outlined black, okay? Now that we apply the PET-D, we can have a down day that's colored green or a down day that's colored red, and in this case, it's colored red. And we have an up day, as you can see, because it's an open body, but the outline is red. So this just means that you have a very strong up day, but it's still in a short-term downtrend because the translator is telling you that this should be looked upon as a selling opportunity, not a buying opportunity. All right, so let's apply this technique. All right, now that we see the two bars are red, we want to take the high of bar number one, not the close and not the opening. We're not looking at the high of the open to close range. We're looking at the extreme high. This is what high really means, the high of the wick, okay? So that's where that is on bar number one. Now we want to see that bar number two is a red bar, which it is, and also closes above that high, which it does. If these requirements are met, you have a sell setup. It's that simple. I know a lot of you are saying, that's it? You mean we don't have to look at the earnings? What about the Fibonacci retracements? What about the moving average crossovers? What about the institutions? What about that economic report on jobless claims that's coming out next week? Remember, keep things simple. I stopped looking at that stuff 43 years ago, and I'm still here. So if it works for me, just as a suggestion, there's no reason you need to look at that. All right, so this is all we need for a sell setup. Now you see here that I didn't say you'll sell at the market, or you'll place a limit, or you'll place your stop here and you'll exit here. Remember, those are all pieces of the puzzle that come with a strategy. This is not a strategy. This is just highlighting a technique. How you decide to enter, how you decide to exit, and how you decide to place your stop is entirely up to you. But you'll get a greater idea of how to apply it once you see all the examples we're going to go through right now. All right, so let's look at this example. It's an older chart of the Dow, all right? As we can see here, most people would say, well, Steve, this is just a sideways market. We were going down, we're going back up, we're going down, then back up. But is it really? Let's apply our translator, the PET D. And now, what colors are these bars? They're all red. Even the up days are outlined red. So even though it looks like we're going sideways to even a little bit higher, the translator is telling us that we are in a short-term downtrend, that you shouldn't get caught up in this and think that we're going to go higher. Now, how could we have applied this technique? Well, we want to look for that two-bar pattern, okay? So we're kind of searching here, and we see, well, okay, we have a bar here. Here's the high, and bar number two closed above, so that's a sell setup. And as you can see, the Dow went down the next couple of days, not a lot, but then quickly bounced up again. Well, we can get back in, or maybe we made money off this, or maybe we're just using this as a market indicator. But either way, here's another setup. There's the high of bar number one, and then we close above that, bar number two. So another sell setup. So at this point, someone would say, well, okay, so I'm short, twice, maybe, or maybe I'm not actually selling anything. I'm using this as a market directional tool, and it's telling me the market's going to go down, but so far nothing's really happened until this, and you see the Dow fell 800 points in one day. Okay, so do you see how the translator was giving you a heads up that don't get caught up in thinking that we're going higher? Oh, sure, you may have had a bullish engulfing pattern right here. Maybe it looked like you hit some major support, and this is where all the institutions wanted to buy. But the translator is coloring all of the bars red. That's all you need to know. If all the bars are red, you do not want to be a buyer. Okay? All right, so let's look at some current technique examples. That was just there for informational purposes to understand the process. Now let's look at things that happened within the last week or the last month, okay? And how it could have helped you. Remember, we're only going to devote today's examples to downward moves, because if we go into an environment where we're going into a sustained downward move, this is where most traders lose everything, because they bought a strategy or they developed one or they thought they were geniuses for the last 2 or 3 years. And then when the market changes environment, when the market changes its energy, all of a sudden nothing works, right? It's like Mike Tyson said, yeah, sure, everyone has a great plan until they get knocked out or they get punched in the face. Then everything goes out the window. And that's the same with trading. Everyone's a genius when the market's going up. But when the market changes direction, how well is your strategy going to work? Well, here's why I wanted to educate you today and share with you just one of the dozens of different techniques you could apply with the PET D. All right, and remember, this is all one click away on our platform. I developed this with Pro Trader Strategies, the PTS Primo charting platform, to make trading simple. And the beauty of this is that the platform actually teaches you how to trade with its setups and with its way of checking your work. Okay, so let's look at letter A. This was coming into the 19th, 20th, 21st of February, just last week or so, okay? Someone looking at this would say, well, Steve, everything looks fine here. In fact, I have a bullish engulfing pattern right here. That's pretty positive. It looks like we have major support. I know I'm only looking at 4 days, but Steve, there's nothing wrong with this. Well, until we apply the PET D on our platform, you click on the PET D, and the majority of the bars are red. 3 out of 4 are red. But remember, this technique only calls for 2 bars. As we see here, the high of bar number 1, well, the close is higher on bar number 2 than that. So that's a sell setup. Now, this was on the 21st, before the market fell out of bed. Do you think it could have helped you going into the end of that week, where it was the worst week since the financial crisis? Let's look at another example, the same thing. Someone looking at BWA would say, okay, well, this is coming into the end of January. We're kind of, drifting a little lower, but it looks like we got some major support here. Well, click on the PET D, and there's no support. Why? Because all the bars are red. Even though it may look like support, I wouldn't take my chances on betting on that until the bars turn green. So what I'm looking at right now is to find the setup that I just taught you. And we have a number of them. We have 1 bar, the closest higher right here. That's a sell setup. 2 more right here. Even though it looked like nothing happened in the middle of January, do you think it could have helped you coming into this last week? And if you missed the very top of these ones right here, you had plenty of chances to get back in for this drop. How about this example in NSIT, okay? Well, obviously we've been headed lower, but someone could say, well, Steve, we found some support right here, okay? I think I'm going to be a buyer. It looks like we're trying to make our way back up to these, test these highs. But if you apply the PET D, all of the bars are red. Even though we only need 2 bars to be colored red for this particular pattern, all of them are red. This is telling us that no matter how much you think we're going to bounce, until you get a series of green bars, you should be looking at this from a selling opportunity. Remember, this is how I'm trying to educate you so you can take advantage of downward moves. So you don't have to be like a deer in the headlights saying, wow, nothing's working anymore. Remember, want what the market wants. And right now the market's telling us it wants to go lower, even though the last 3 days have closed higher. So we apply this technique. We see there was a sell setup right here, another one right here, and another one right here. Coming into the end of February, you could have gained 16 points and even had 1 more setup down here. As we look at SYY, once again coming into February, prior to the really big downward move, it looked like the stock was just going sideways. Major support, right? No, all the bars are red. We applied the technique. We had 1 sell signal right here. This was in the end of January, a full month before the market fell out of bed. You could have gotten short, and the stock fell 18 points coming into the last week of February. The beauty of this is, if the trend is strong enough and the market is still telling you it wants to go lower, you will see more setups along the way. So if you missed that one, look at all the different setups you had to go short. Now, here's the way most traders trade, myself included when I first started out. I'd look at a chart like this and say, well, wow, look at this. We hit the low, and now we're bouncing back up. So this has got to be major support. In fact, I took that $1,000 class on the institutions, and they're saying that the institutions are big buyers here. So I don't want to buck the institutions, right? They're the best traders. They must know what's going on. So if they're buying, then I want to be a buyer too, right? Well, remember, want what the market wants. Not want what the institutions want, or not want what some guy in a chat room wants, or not want what some guy on TV wants. Want what the market wants. And someone would say, but Steve, the market wants to go higher. Look at this nice upward move. Well, does it really? Because we need our translator. Our translator, once we click it on, is telling us that even though the last 3 days have closed higher, this is just a bounce in a short-term downtrend. So the market doesn't want to go higher. Until you see 3 or so green bars, the market still wants to go lower. And these are actually selling opportunities. For example, you have bar 1 and bar 2. There's a sell opportunity right there. You could have sold right there. And then another one, bar 1, bar 2. So you had 2 opportunities to go short in SLAB prior to the market falling nearly 20 points. The beauty, once again, if you missed these, there were more generated along the way. Do you see how sensitive the PET D is? And that there's no reason you have to listen to earnings, or no reason you have to worry about what the economic figures are. You really don't. I mean, like I said, I stopped looking at that 4 decades ago. And if I'm still trading to this day, then wouldn't it be logical that you really don't need it if it's not that important to you? Now, once again, we're not here to tell you how not to trade. So if you feel that you must look at earnings, you must look at economic reports, that's fine. I'm not going to tell you not to do that. But if you're asking me, is that required? Absolutely not. All right, CVX, in hindsight, this was the last week in February, just a week ago, someone would say, well, yeah, Steve, it's easy to see where we're going down, but how could I have taken advantage of this before it dropped tremendously? Well, if you had applied the PET D, you would have seen that right here on the 14th, 18th, and 19th, you had 3 red bars, and this was the sell setup. You could have taken advantage of 21 points to the downside. You could have bought some nice puts in that and made potentially 21 points. Now remember, I'm not saying everyone would have made 21 points, 18 points, 50 points. It's up to you, because this, once again, is not a strategy. A strategy comes with exit levels. A strategy comes with entry points. It comes with stop placements. It tells you how many shares to buy. It tracks the trade for you if you want to track it all the way down. That's not what this is doing. This is simply highlighting or placing a spotlight on a high probability point of going short. How you enter and how you decide to implement all those other categories are entirely up to you. So potentially you could have made 21 points if you stayed in long enough. Maybe you only wanted to make 5 points. All right, that's fine too. It's entirely up to you. As we stated in the beginning, the only way you can become a consistent trader in our philosophy at Specialist Trading is by making your own trading decisions. If you come here thinking that I'm going to tell you where to buy and where to sell, where to enter, where to exit, and where to place your stop, you've come to the wrong place. Now, we teach you different variables of this, but it's up to you to decide. We have 7 different entry points, 7 exits, 7 stop placements. But how you decide is up to you, okay? I'm not going to tell you you must enter here or must exit here. All right, here's a great example of why most traders lose money. Because most traders, myself included, I'm not singling myself out because I did the same thing when I first started trading. I would look at this and say, gosh, this is major support. Look at that. We've come right to a Fibonacci level. Maybe this is some Elliott wave level and all the banks are buying here. So I want to be a buyer, right? So if you look at the markets this way, most likely you're going to be inconsistent. It's a lot easier to want what the market wants by using the translator. Click on the PET D and you can see where someone thought support, someone who's skilled at using the PET D and who listens to the market would say, there's no support here. The market is telling me it wants to go lower. Now, it hasn't done so yet, but it's telling me it wants to, okay? So why would I want to buy if the market is telling me it wants to go lower? So you would, at this point, well before anyone else, start looking for this technique. And you would have seen 2. There was one right here and another one right here, well before the market fell out of bed, okay? I know many students that are new students of mine say, how did you know that? How did you know it was going to go down 21 points? Remember, we don't know it's going to go down. We don't predict how high or how low something will go. We only listen to the market and then teach you upwards of 6 or 7 different exit points for you to decide. All right, here's another example, KLAC. Reversal here, we bottomed out and we've closed higher on the last 2 days. So it looks like we're kind of had opened lower and closed higher, closed higher. We apply the PET D and see, well, the last 2 bars are red. So the market's telling us it doesn't really want to go higher. And we can apply the technique right here. You would have made 30 points in a week where everyone else thought we had bottomed out. Now, potentially, you could have made. I'm not saying you would have made. Here's an example in GS, Goldman. As you can see, it looks like we're going sideways. Once again, you apply the red bars. Here's the sell setup. Potentially, you could have captured 42 points. You see, all these things just happened a week or so ago. I go to so many webinars because I like to see what other people are teaching and other so-called educators are talking about. And usually, they'll show some great examples. You know, we could have made 20, 30, 40 points. And I'll see the date and they're like 6 months to a year old. I like to show you things that happened in the last week or 2. And as you can see, all these things happened. And this is a technique that most of our PET D students know about that have been using. And so a lot of our students took advantage of this. All right, now UI looks like it was going lower. This is coming into February, as we saw earlier. Someone at this point that's not skilled with listening to the market would have said, well, Steve, this is oversold. All of the indicators are tremendously oversold. All the oscillators I watch say that this thing should be bought. And we've come to some great support here on the Elliott wave support. We hit the bottom of a wave 2. So I want to get involved in this before it takes off. Okay, and then guess what? It starts to go up. So now you're convinced. So you jump on board. Let's say you bought here and you're all excited thinking this thing's going to make new highs on the wave 3. Okay. Well, if you listen to the market, you would have seen that the market really doesn't want to go up, because all the bars, even the last 3 or 4 that were going higher, are all been colored red. So even though the market's been bouncing, it's telling you that I really don't want to go up. I want to go lower. I want to go lower. So why should we buy if the market wants to go lower? Why should we swim upstream if the current is going in a different direction? Remember, it's so much easier. You will be a consistent trader if you want what the market wants. So now that you know that it wants to go lower, apply this technique, and you see you have a number of chances to go short, 1, 2, and 3, and the stock fell 43 points. Remember, once again, at this point, when it gapped lower, you could have said, gosh, I missed it. Well, not really, because you had another setup here before it went down another 10 points. All right, so let's look at some other markets and time frames, because not everyone just trades daily bars of stocks. Let's first of all look at some higher time frames. Let's look at TGT, all right? This is a weekly chart. Now, we're only going to look at the past 5 or 6 weeks. Someone could say, well, Steve, a weekly chart, you're supposed to be a swing trader. You got to look at, back at least, 3 or 6 months to get an idea of what's going on. You need to know, what's going on with the volume. You need to see what all the banks are doing. Well, once again, I was taught the same thing. I stopped using that information 40 years ago. All I need to do is apply the PET-D. Click it on, and all the bars are red. Excuse me. So why would I need to know what the earnings are going to be, or why would I need to know what some banks are doing? The market, the source of what I'm trading, is telling me it wants to go lower. That's all I need to know. Now I apply this 2-bar technique I just taught you. Here's the high of this bar. We close above. So I could have shorted here, bought some puts, and in 2 weeks made 16 points to the downside. Here's a 4-hour chart of the Australian dollar. Any currency pair traders here, okay? Looking in hindsight, sure, it's easy to see this was from the 17th of February coming into the 28th. It was easy to see this was in a downtrend, but how could you have known prior to this large move to the downside, say up here, that we were in a downtrend? Well, you apply the PET-D and look at all the red bars. Sure, we have one green here every once in a while, then one green, but remember, you need 3 to 5 of a different color to tell you that the trend has changed. So once we know the majority of bars are red, we apply this technique. Had you taken this very first setup, potentially you could have captured 250 pips. That's roughly around $2,500 per contract, per unit, in just about a week's time, a week or two. Any E-mini traders out there? Here's a 5-minute chart of the E-mini on the 27th of February. This was just last week. Okay, obviously, once again, in hindsight, it's easy to see we're in a downtrend, but how could we have known well in advance, say up here? Well, apply the PET-D, and look, we knew well in advance, 3 to 5 red bars, that we're in a downtrend. There was no reason to think that the market bottomed out or to think that we were oversold. We don't look at those things. We just listen to what the market is telling us. So on this 5-minute chart, look at all the examples we could have gotten short. Had you taken the very first one, held on to it for about a day or so, potentially you could have made 120 points. Now, potentially, that means capturing $6,000 per contract. Remember, we're not telling you would have, because that's your decision. How long you want to hold it is entirely up to you. We just teach you different ways in which to exit, different ways to enter, and different ways to place your stop. Which one you decide upon is entirely up to you. All right, so let's recap before we go into question and answer portion. Remember, the technique is you have to apply the PET-D to the 2-bar pattern. You want to see both bars, regardless. I just showed you 5-minute bars. I've showed you weekly bars. I've showed you daily. I've showed you 4-hour bars. Doesn't matter what time frame or what market. Once you see 2 red bars, bar number 1 and bar number 2, you want to see the high of bar number 1. If bar number 2 closes above the high of bar number 1, and if they're both colored red, that is a sell setup. Important points to remember, though. As I stated earlier many times, this is not a complete strategy. In order to have a complete strategy, you need to have advanced entry signals. You need to have stop placement. You need to have advanced exit signals. You need to have money management. None of those things were discussed today. Why? Because this isn't a strategy. This is just a technique, one of the dozens of techniques that the PET-D supplies and provides for you, and we teach you in our courses. So, as we close here, and before you ask me questions, I want you to ask yourself a question and ask yourself honestly. We're already in the first quarter of 2020. Do you think this technique can help your trading for the remainder of the year? What if we go into a sustained downward move here? Are you going to be able to handle it? This is where most traders throw in the towel. You remember 2008? Well, 2008 was a great year for our students because they knew these techniques already and they were able to trade in sync with the change of the market. But most traders who didn't know how to listen to the market, all of a sudden none of their strategies or systems work anymore and they threw in the towel. So ask yourself, if we go into a sustained downward move, will this technique be able to help your trading? I think your honest answer would be yes. So we have a great attendee discount and a great offer for all the people today in today's webinar. We're going to offer you our roadmap for any market. This is the PET D. We're going to give you a great discounted price on the PET D. This is our roadmap. Once again, you're going to get the proprietary color bar algorithm. This includes the add-on if you want to use it for a different platform like TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader. Now, this comes with 2 other continuation trading techniques. It also comes with 2 pullback trading techniques as well as a trailing stop technique. But let me share with you something else that we talked about before that I've talked about in other presentations. This is an entirely different technique, as you can see here, that confirms signals. For example, let's say you're a candlestick trader. Here's an older chart of the spiders. This is going back to last year. Let's say you're a candlestick trader. You've always been taught that candlesticks are reversal patterns. So you like to look at those, and especially like bearish engulfing patterns, right? So you see this and you say, wow, this is a bearish engulfing pattern right here. This is a sell signal. We've already come up. This is at the very top. I'm going to sell right here. So you bet the farm. Let's say you buy the puts. Maybe you short the stock. And then this happens, right? Look familiar? All right, this is the way most traders trade. And then after nothing works for a while, they either get blown out or they quit trading altogether. But let's say you have a little bit more money left and you're watching and you say, wow, boy, I really took a beating on that one. And then what do you see? You see another bearish engulfing pattern. But you're a little bit weary. You're saying, wow, I lost too much money. In fact, I can't even trade anymore. So I'm just going to sit back on this one. All right. Now, how would the PET D have helped us in this situation? Well, once you apply the PET D, you'll see that we change colors on any market and time frame. And you see here where we had the first bearish engulfing pattern, what color was bar number 2 of the engulfing pattern? It was green. So this is what we mean by confirming a signal. It didn't confirm the trade. You need both of those bars, or at least one of those bars, to be red. So you would not have taken this, and therefore that trader would not have lost a lot of money. But now, as we go up here to the high of the spiders on this day, what color was the engulfing bar? It was red. So it was being confirmed by the PET D. So the PET D at the very top of the market in May last year said this is a valid sell signal. All right, not guaranteeing it's going to work out. We don't know how low it'll go, but it's being confirmed. And look what happened. The spiders fell 19 points, which was the same as 1,800 points in 1 month in the Dow. Now, let's say you didn't trade that, but used it as a tool. You could have identified what the market was doing and said, wow, this really helped me. It kept me out of the markets. And now, as the market now is in a sustained downward move, you could have applied the 2-bar technique that I just shared with you and taken advantage of the downward move. So there are just so many ways to use this. This is one of the things we teach you in our course. Now, I know a lot of you say, well, Steve, what if we don't go into a downward move? How do I use this technique? I mean, can I use it to the upside? The good news is, yes, you can. For example, here's an older chart in KASY. All right. Let's say you look at this and you go, well, okay, we're kind of have a sideways market. I don't really want to do anything here, so I'll pass this and go on to the next one. But if you apply the PET D, you see that the market actually changed right here and said that now we want to go higher. Okay. So what do we have? We look for that 2-bar pattern and we see here that we do the opposite. What we want now is to see where the low of bar number 1 is, and we want to close below that, provided that both bars are green. Remember, before we were seeing the high and we were closing above, both bars were red, which was a sell. Now we just do the opposite. 2 bars are green. We take the low of bar number 1, and we want to see that bar number 2 closes below. That is a buy setup. And the stock jumped 15 points the next day. Most people would say, how did you know that? I mean, do you guys follow the earnings? There must have been some earnings announcement or something about the company. No. You see, it's our philosophy that the market tells you just about everything you need to know. That's why that's the only thing we listen to, the market. It's not required to look at earnings. It's not required to look at jobless claims. It's not required to have a chat room or a trading room because the market tells you. I'm not going to tell you because I'm listening to the market myself. I'm not making any decisions based on my own personal opinion. Like I said, all this past week, people have been calling me up or emailing me saying, Steve, what do you think of the market? I'm saying, well, I'm only doing what the market does. The market at this point is saying it wants to go lower. I don't think it's in my opinion, what it's going to do. I'm just listening to what the market wants. And the market's telling me it still wants to go lower. So if that's what the market's telling me, then I'm a seller. So you're going to see how valuable the Pet D is with this great discounted offer we're going to share with you. But we're not going to stop there. This is our roadmap for any market. We're also going to throw in 12 months free of our platform. This is where everything is just one click away. All you have to do is click on the Pet D and the colors automatically change. It's that simple. And there are so many other things involved in this as well. But this is such a great offer. We're only going to offer this 12 months free until Friday. Okay, this is a great discount. And let me share with you what else is included. All right, you're not only going to get one-click access to the Pet D, you're going to get our enhanced buy sell line. This is a feature of telling you whether the market is in the overall uptrend or overall downtrend. So that's more of a longer-term way of looking at the market. When you have the short-term Pet D in sync with the overall, you have a really high level of consistency in whatever your signal is. You're also going to get our strength of trend tool. This tool worked tremendously for our students that had this last week because it really pinpointed that the market was running out of steam to the upside. And then, as you can see, we all saw what the market did last week. You also have a signal scanner. The signal scanner is unbelievable because you can scan for Pet D setups the night before, the Pet D green or red bars, okay? Auto-generated exit levels. You won't find this anywhere else except on our platform where we tell you automatically where the exit levels are. Now, this is all included on our roadmap for any market, and it also comes with great tech support, including educational correspondence. You can email me anytime with any questions about trading the Pet D or if you're not really clear or sure on how something should work. Now, this is such a great deal. Let's break it down. Usually this would cost you close to $4,000 or $5,000. We're going to offer this, the Pet D with the 12 months for only $29.95. You're also going to get payment plans. So if you can't come up with $29.95, you can contact Pro Trader Strategies, and for a small deposit, just a small deposit, you can still be up and running and be on a payment plan and not have to worry about coming up with $29.95. Remember, 1 year of the platform along with the Pet D usually costs close to $4 or $5 grand depending on how much they're discounting it. Right now, we've discounted the entire thing down to $29.95 with payment plans. But please remember, this is through Friday only. You have to make a quick decision on this because it'll go back up to roughly about $4,000 or $5,000. Now, as we close, trust me, a year from today, you will have wished you became a member of this course. There are literally dozens, if not hundreds of ways to apply the Pet D. I just shared with you one of the many ways in which to use it that will help you in any market, most especially a downward market. So here's how to take advantage of this great offer. Contact Pro Trader Strategies if you'd like to set up a payment plan. You can email them at trading@protraderstrategies.com. I would highly suggest call them directly at area code 310-598-6677. There are qualified trading consultants manning the phones right now. They would be more than happy to answer any question and to give you the information about a payment plan. There's absolutely no obligation. You don't have to purchase something, so don't be afraid to call up. You can talk and discuss something with them without having to worry about making a sale over the phone. Now, if you want to, you can, but they'll give you the information and then you can think about it and decide. But remember, you only have until Friday to take advantage of this great offer. Now, that link you see at the very bottom has been posted on our chat box. The chat box has the live link. This link is not live, so all you have to do is go to the chat box on the far right-hand corner of the GoToWebinar column and click that on. It will take you to the information page and the sign-up page, okay? Now, I promised we would reserve the remaining portion for any questions, so if you have questions, now's the time to ask. Just go to your question and answer box, open that up, and type in whatever question you want, and I will be happy to answer it. Okay, see, I already have a couple here. It says some futures like coffee are not available on the platform. Anything we can do? Carlos, actually, there is availability for future. I should say not futures, but the commodities like coffee. I would contact the tech support because I know I did a webinar a couple of weeks that used a coffee example. Now I used the actual coffee chart, the actual commodity, but I would contact Pro Trader Strategies. I know a lot of people, but that brings me up to a very good topic. if we go into a sustained downward market, I'm not saying we are because I don't know. I'm just saying at this moment, the market's telling us it wants to go lower, but that could change tomorrow. But if we continue on this, what a lot of traders like to do is switch from stocks. They want to go into something that's more tangible, like actual commodities. And so commodities are tremendous markets. I've traded commodities before, and they're great with the pet D, okay? And so Carlos, I would contact Pro Trader Strategies and ask for the tech support, because they should be able to supply you with commodities. It just may be another data version. You may have to pay for that. I'm not really sure, but I would contact them first, okay? Robert is asking, what's the difference between the pet D fast and the pet D slow? Well, the pet D fast is something we use in just about 3/4 of all our trading, okay? Because mainly it's used for entries. Now, the pet D slow is something most traders like to use once they're already in a trade. They want to make sure that they'll stay in the trade longer. So what a lot of traders would do is say, let's say you bought the E-mini futures, okay, when they were going higher. Rather than just exit at one specific exit point, maybe you would exit a portion of your position there and then apply the pet D slow and just stay in the position with the remaining portion of your contracts, I should say, until the pet D turns red. There's lots of different ways to use it. That's just one way. Another way to use the pet D slow is as a stop technique as well. So there's lots of different ways, and you can still use it when you're using any technique. A lot of traders like to say, you know what, Steve, I don't even use the standard pet D. I just use the pet D slow. It seems to work for me better. That's fine. It's entirely up to you. It's just a slower way of calculating or translating what the market wants to do, okay? I hope that answers your question. Someone's asking, can it work on intraday currency pairs? Yes, it does. I think you may have asked this question prior to when I showed you, I had that 4-hour chart of the Australian dollar. But remember, excuse me, even if the 4-hour chart was too long a time period, we have traders who use this on 5-minute currency pairs, on tick charts of the currency pairs. So it doesn't have to be an hourly chart. It can be much lower, yes. You can apply the pet D to any time frame, any direction, and any market. It makes absolutely no difference, okay? Last question, can you apply the pet D with Thinkorswim? Yes, you can, but the way it's set up, Thinkorswim wants us to use, they don't want it to apply it on their actual charts. So what they've allowed us to do is use their data. So if you're a Thinkorswim customer, we'll splice your data, we'll take your data with Thinkorswim and then give you a free NinjaTrader platform where you can see everything on NinjaTrader. But here's the one thing. I would suggest, why would you want to do that? Because everything is already right there on the PTS Primo charting platform. It's one click away. It's so much easier on our platform than it is on any other platform I've ever used. So I would more likely just apply that. You can toggle back and forth between Thinkorswim and our educational platform. It's that simple. I do that because I enter my trades through another platform. But then when I want to look at the setups or get ideas about trades, I will be looking at our platform for educational setups, and then I'll enter through using my other platform. So it's that simple. That would be my suggestion anyway. Okay, good questions. If there are no more, we've come to the end of the presentation. Remember, if you have any questions concerning the price or the payment plans, please do not hesitate to contact Pro Trader Strategies. There's absolutely no obligation. Just give them a call, 310-598-6677. They would be more than happy to answer any question without obligation. They can set up a payment plan for you. You can think about it. But remember, this is for a limited time only. The price will go up to $4,000 or $5,000 after that. So you don't want to sit on this. A lot of traders do this, and they'll email me and say, Steve, gosh, I saw your webinar 2 weeks ago. Now the price is thousands of dollars higher. Is there anything you can do for me? And I said, well, you know, I'm not in charge of that. Pro Trader Strategies is in charge of all the discounts and the pricing. So if you're really serious about taking your trading to the next level and you really want to get involved with the Pet D and become a student of mine with the Pet D course, please do not sit on this, okay? So that's all the information you need. I would suggest calling Pro Trader Strategies with no obligation at all, okay? Now, as we take one last look at our disclaimer, I just want to say thanks for taking time out of your Wednesday to come and see this educational presentation, but most especially, I hope that you all take advantage of this great offer, this great discount, and become students of mine in the Pet D course. All right. Thank you so much for listening today. I'll see you next week. Bye-bye.